Okay, Euro US dollar monthly time frame, we have our M pattern just over here that was broken, huge decline towards the downside, lot of bullish pressure just over here, and there was a bearish engulfing candlestick bouncing off the 20 and 50 moving averages. And this is the weekly time frame. We had a nice shooting star just over here, a rejection of the 100 moving average, went towards the downside, and now currently bouncing off the 20 and 50 moving averages. 20 and 50 moving averages have actually been broken towards the upside, which indicates bullish pressure. So monthly is bearish, weekly is bullish. What do we have on the daily? Well, recently it managed to break past the 2 moving averages but bounced off the 100 moving average as well, currently sitting somewhere in between the 20 and 50 moving averages in the middle. Now what I would say is important is this area zone over here. Previous area of clear resistance has been rejected multiple times as strong resistance area. Now for the 4-hour time frame, we do have a rejection closure of the 200 moving average, so we might have a pushback down towards the 1-hour channel just over here. As you can see, bearish engulfing candlestick, we might see some sort of rejection before a push towards the upside once again to retest the potential channel, or even retest the daily resistance just over here. Potentially you could enter a trade somewhere around here, maybe 60 pips to potentially even maximize 120 pip move. If you long this position just somewhere over here, that would give you a nice little 3-to-1 risk reward. But please keep in mind that we are on a huge resistance area on the monthly time frame. So maybe this space over here, this place for movement, let's just take a look, around 160, 150 pips, I would say. But after that, there might be a strong rejection back down to continue its higher time frame bearish trend. So a very similar scenario on GBPUSD. M formation was broken, pushed towards the downside, nice little pullback, bearish engulfing candlestick on the monthly. Now the last weekly candlestick has broken the 2 moving averages, which is awesome, which means it's a lot of buying pressure. We can pretty much see the same thing on the daily. A nice little channel over here was broken towards the upside, had a little pullback towards the 120 moving averages. It bounced off the 50 and 20. That's the usual way of trading. As you can see, currently break past the 50 as well. Now on the 4-hour time frame, there is a form of resistance, so we need to be careful. There might be a pullback towards the moving averages once again. You could potentially aim to enter somewhere in between the 2 moving averages. So entry over here covers the 2 moving averages once again, also the 200 as well. If it pulls back and bounces off the 200, that could be a nice little trade towards the upside. So you could potentially aim for something like this, 2-to-1 risk reward, easy little trade over here. But keep in mind the overall direction on the higher time frame is bearish, so this means the risk is definitely on. And if we manage to break all of these moving averages towards the downside and the daily moving averages as well, then we could potentially aim for the 200 moving average space over here. That would be around 130 pips if we would enter on the break of the 20 moving average. But likely this shouldn't happen next week unless we have huge volatile news. So USD Japanese yen push exhaustion scenario, bullish engulfing candlestick, but we didn't see any bullish pressure to retest the top. This is interesting. Now 13 days left, but the candlestick is quite bearish. It has not touched the 20 moving average yet. This is going to be a solid area of sensitivity, so it could bounce off here. So this is the weekly time frame. As we can see, this is the area of sensitivity I'm talking about. Now we have broken the 20 and 50 moving averages. Once again, we could potentially aim to short for a nice little gain over here, 400 pips space movement. And as you can see on the daily as well, very favorable for a bearish scenario, bearish engulfing candlestick on the daily, breaking the 50 moving average. This is really good. All we need now is an exhaustion, and then we could travel back down. And this is the 4-hour time frame. No need for fancy analysis. It is making new lows every single time. The trend is steeply dropping down. So for entry and exhaustion, back towards the trend line somewhere over here, maybe towards the yellow 20 moving average line, that would be great. Nice little exhaustion back towards the downside to retest the previous bottom. If you entered here, that would be around 130 pips, and potentially you could aim for even lower because you have space for the weekly movement as mentioned earlier. Another thing to probably point out is the risk reward ratio. I mean, 120 pips stop loss would be quite high, so so 80 pips is the maximum I go for. So if we do get a bounce off 200 moving average, it probably would be even better. So maybe the trend's gonna change. The trend might be something like this even, and if it pulls back, it might bounce off the 20 and 50 moving averages, but could be the 200 moving average, which is a strong area of resistance over here. That could potentially give you the better risk reward, as well as to aim for the bottom. Look at this, 2.8 risk reward. That would be beautiful. And if you continue traded, I mean, the sky's the limit. Okay, NZDUSD monthly, not much to see. Bearish engulfing candlestick, little exhaustion. Back up. Weekly time frame currently formed a bullish engulfing candlestick, but did not break the 2 moving averages, so I do expect some form of rejection actually. And on the daily, very similar scenario. Although it has broken the 200 moving average, it has not broken the 100 and 20 and 50, which is the most important moving averages in my eyes at least. And we do have this strong area resistance as well, so I expect some form of resistance definitely over here. 4-hour time frame, look at this, it's getting form of rejections. It did manage to break the 200 moving average, but I'm not too confident with this candlestick over here, so really need to see what's gonna happen. If it's gonna clearly break this previous daily area zone, then we could potentially go push exhaustion and aim for that trend over here, but very unlikely. I feel like it's gonna just drop down. So I would say for entry, if we manage to break the 200 moving average, maybe with the shooting star, you could potentially aim towards the 20 and 50 moving averages, maybe the 100 moving average, this one over here for 67 pips. But it's not the greatest scenario. It's on a little squeeze pattern, as we can see at the moment. Clearly we can see a strong area of resistance over here, so you can just imagine the price moving back down somewhere over here, maybe coming back up and breaking, or the latter scenario, just coming down and breaking the 2 moving averages and continuing with the higher time frame trend. USD Swiss franc monthly time frame, kind of on the monthly squeeze. As you can see, resistance kind of trend going towards the upside. A little rejection of the trend. The weekly time frame M pattern has been broken, went towards the downside, push exhaustion just over here, coming back down and kind of rejecting the monthly trend line. Look at these wicks as well. Daily time frame support just over here actually managed to break the 50 moving average very slightly, but has managed. So push exhaustion, breaking back down. 4-hour time frame, if we manage to break the 20 moving average, potentially we could go for a nice retest of the bottom over here, but only if it breaks the 20 moving average. It has not broken yet. It has broken the 50 and 200 with the bearish engulfing candlestick, but there is a form of slight support over here. We can probably see it on the hourly. Yeah, that makes sense, as you can see. So if we manage to break that zone over here, I wouldn't be scared of the 100 moving average on the 1-hour time frame. I feel like if it manages to break the 20 moving average, it's going down. Push exhaustion, entry here, and then we could potentially retest the bottom. That would be a huge trade, at least 150, 160 pips profit. Beautiful. Okay, USDCAD bullish engulfing candlestick retesting this previous area level. Weekly time frame, we can see clearly a W formation. It has failed to break it. We are seeing bearish pressure just over here. Now on the daily time frame, bullish engulfing candlestick, slight rejection, and now uncertain candle over here. We do still have this trend, and on the 4-hour time frame, we have been stuck in this kind of, as you can see, squeeze pattern just over here. With my VIP members, we actually managed to bang a little bit, as you can see, 55 pips before it went towards the downside. We usually move stop loss to entry anyway, but I really expected that it would go towards the upside to retest this previous top level. It's not retesting it. It's kind of on this squeeze pattern at the moment. If it breaks the 50 moving average, it would be a nice push, exhaustion, push back to retest this previous top level, or potentially this level over here, which I initially said it should be reaching as well. I do like the last candlestick formation as well. It looks promising. Okay, Aussie dollar, we can see that squeeze pattern, right? Bearish engulfing, weekly time frame, bearish engulfing, pulling back at the moment to the previous area of sensitivity. Daily time time frame, very similar, pulling back towards an area of resistance just over here. Very strong resistance, 200 moving average, 100 over here, 20 and 50. I definitely expect a bounce back towards the downside to retest the previous bottom level. However, the 4-hour time frame looks interesting. Look at this, consolidation went towards the downside, pull back to the previous area sensitivity, went towards the downside as well, and what's currently happening, push towards the upside, actually made a new high. Very interesting. Now there's two kind of scenarios. Maybe Aussie US dollar will gain power and go towards the upside, towards the 200 moving average, which is around 124 pips. Now if we have a look at the daily time frame, this is somewhere in between the 20 and 50 moving averages, so this could definitely happen and we could have a move of 124 pips. Now you ask me, how likely is that? Well, it could be, you know, it's making new highs, it is trending towards the upside at the moment. It might just retest this area zone and drop back down, and if it breaks past the 100 moving average quite solidly, I would be confident that it's back to retest the previous bottom level. But overall, I would wait and see with this trading pair, because we don't know what's it gonna do next. We don't know whether it's gonna just push up towards here and then you could short for a very nice risk reward ratio. Based on the daily analysis, you would be covering the 50 moving average as well. Let's say something like that, you would short your position somewhere over here. Stop loss would be around 80 pips, and let's say take profit 160, you could potentially aim for a little bit more just at the bottom over here. So this could give you 2.7 risk reward ratio, and this could definitely happen. A nice little push towards the upside. Somewhere over here we get a rejection, entry here, and then we are going back down. This could be nice and beautiful. Okay, gold US dollar, and it has actually moved quite a bit. Look at this, bullish engulfing candlestick forming, not yet closed by the way. 13 days left until this new candlestick closes. If it closes like that, it's a new high, and gold could potentially start this huge heavy bullish rally since it has been doing since 1971, it seems. The weekly time frame, we are here, we're on the resistance zone. We don't know what happens, but honestly, with this huge kind of candlestick over here, it doesn't last. These huge candlesticks need an exhaustion, so I do expect a form of kind of pullback next week, definitely. Look at this, look at this huge price action, free blue candlestick. This is a perfect price action for further bullish pressure, but honestly, it's on such a strong area of resistance over here. I still expect a move towards the downside before maybe it pushes back up to retest once again. If it manages to break it like that, then well, it's nice, but you are missing the move. There's no proper entry. If you entered over here already, you wouldn't be in a nice risk reward whatsoever. I mean, you could aim for the sky basically on this one, but is this a good risk reward? Probably not. I wouldn't like it. You want to pull back towards the 2 moving averages over here, the previous area of sensitivity, somewhere around here, to potentially aim for that, cover the 2 moving averages. This would be a much better setup. Maybe even make it a little bit smaller, 2-to-1 risk reward, something like that. It's much more logical to enter here than just enter here on this hype train that we have at the moment.